I actually had to ask a friend, what do I do? And he says, you're a successful tech entrepreneur and a Rocketlab fanatic. I remember when the company got down to about $3.60, and I just sat there, was like, this is incredible. You can buy into a space company for $3.60 and you have the SpaceX proxy to it. It's like, what an opportunity. That's easy to buy. It's very hard to know when to sell. And I think I have a really simple proxy for that is, what's Peter Beck doing? He's in a high growth startup. Is he sitting there thinking, I'm going to sell this company? I don't think he's thinking that. He's thinking, we're taking this thing to the moon. As an investor, it's like, I'm following Peter here. So I'll ride Peter's coattails all day long. I sort of totally understand the space. I'm not trying to manage lots of little stocks. It's just one stock that I care about. Like my stocks is 99% one stock. Even my mum's a shareholder. And she's done really well.
Hello and welcome to another episode of Ways to Wealth. Today I'm joined by John. John, why don't you give us the TLDR of who you are and what you're working on?
Cool. Great way to start the podcast. This is probably the question I hate the most.
Oh, good.
Because I find it really, really hard to describe who I am. I actually had to ask a friend of, what do I do? And he says, you're a successful tech entrepreneur and a Rocketlab fanatic. I was like, I think that sums me up.
Oh yeah, you're a Rocketlab fanatic.
I love Rocketlab.
Why do you love Rocketlab so much?
I think I just love the journey that they've been on. They started out a long time ago. I even built a little bit of software for them back in the early days, before they were Rocketlab. Right. When they were just mucking around. And I love the space that they're in. Space. Yeah. In that area. And I think when they listed on the NASDAQ, it was like, I can get into a space company. I couldn't get into. They're not asking for individuals to buy into early rounds. Yeah, that was all the big companies. So once they listed on the stock market and the SPAC, I was like, oh great, I'm in. Nice, which is quite cool. And so I've sort of been following that journey and how they've gone through how they've gone up and down and up again. Yeah, it's a spectacular roller coaster. Yeah, that's right. I mean, I think that the progress has continued, right? They've continued to deliver more launches, they're hitting their milestones, and then, obviously, aside from that, there's obviously how the market is pricing them on a day-to-day basis. And, that has a connection to what they're doing as an individual company, what the general market has been doing, and then obviously what SpaceX has been doing as a privately listed company. So there's a lot of interesting kind of dynamics around it. It's like the closest proxy to SpaceX, unless you're doing a secondary and you're trying to buy some private shares of SpaceX. So it's been cool, and it's a really interesting story for New Zealand. How much of a Kiwi company is it anymore? Because it's very US centric. But the shareholder base is very New Zealand centric. Yeah, and I think we've managed to grab a large amount of that shareholding. Yeah, that is true. Even my mum's a shareholder. Yeah, and she's done really well. So I think it's always hard. What is a New Zealand company? Is it a good thing? And if you even think, is it an American company? Is it a New Zealand company? They're trying to buy a German company at the moment. So they're buying companies around the world. So you see, I think the global thing's interesting. Well, I think it's definitely helped them. Yeah. The capital kind of structure for them has been much easier because of the path they've taken. Yeah. And I think the product market fit is much better to have that backing and have that kind of centrality of US kind of exposure. Yeah. They would have never been able to do this in the New Zealand markets. They would have not been able to raise as much capital. They would have probably struggled to get the market cap that they have today, et cetera, et cetera. Oh, I love that story because I remember they went to the Ice House originally and they said, hey, we want to put a spaceport into New Zealand, and the Ice House sort of looked at them and was like, a spaceport in New Zealand? Yeah, you're not going to do this. So there's lots of stories how they weren't able to raise in New Zealand and how just the tenacity of Peter. Yeah, and I think that's if something I've really enjoyed. I think we're sort of looking at the current time. I thought when I rolled back to when I started investing, and you sort of just looked at this amazing company trying to get into space, trying to do all this fundraising, getting this fundraising, and hitting these milestones as that proxy to SpaceX. And you thought, I remember when the company got down to about $3.60, and I just sat there, was like, this is incredible. You can buy into a space company for $3.60, and you have the SpaceX proxy to it. It's like what an opportunity. And so most of my purchases were in that sub $10 range. Nice. Of basically lower than the SPAC price originally. I know, and I bought in the SPAC price, and the SPAC price jumped up, and I sort of sold out of it. It's like, what a great ride! And then once it hit and came back down to $9, you're like, oh, this is incredible, this is cheap, and then it drops down to 7, you're like, oh, I'm losing money here. It goes down to 3, and I'm like, at 3, it's like, man, this is cheap. What a great company to buy.
Yeah.
And so in that sub $10 range, it's been quite amazing. And then I think you think about, why do you stay with a company for this long?
How do you ride your winners? Like, you know, I think that's the kind of interesting kind of dynamic, right? How do you ride your winners?
How do you ride your winners? Like I said, it's easy to buy. It's very hard to know when to sell. And I think I have a really simple proxy for that is, what's Peter Beck doing? He's in a high growth startup. Is he sitting there thinking, I'm going to sell this company? I don't think he's thinking that. He's thinking, we're taking this thing to the moon. We're going to be there. And I sort of like, as an investor, it's like, I'm following Peter here. I'll ride Peter's coattails all day long. What a fantastic place to be in space. You're with an incredibly strong founder.
Yeah.
You're with a company that's got a whole lot of engineering team. And you're like, and Peter's there, and you're like, oh, if Peter's there, I'm there. I'm gonna ride your coattails. I think it's currently my investment philosophy.
Yeah.
But as that goes along, I don't know what the future troubles are. You're right. Well, at what time do you say, hey, it's time to pull some of the money out or do that? That's been sort of an interesting challenge.
Yeah, I think like that's a kind of interesting philosophical question around like what race are you running?
Yeah.
I had this interesting trade, and it's a bit more doom and gloom than riding, SpaceX and an optimistic space story of like, what does the future look like, and then as exciting, optimistic, right? Of around when pre-Ukraine Russia, I actually just happened to see a lot of Twitter content of all these soldiers marching somewhere. I was like, that seems a bit weird. Like, this seems a bit odd. And I decided it was a good idea to buy some optional gold and wheat.
Oh, okay. Yeah.
And it all kicked off, and they did really well. They over 10x'd those options.
Impressive.
And I decided to get out of them. And it was the time when Clubhouse was a thing, right?
Yeah.
And we had a little community of people. There were mainly Americans that were either fund managers, analysts, or kind of professionals that love to speculate. And I got out, and I was no longer in it. And one of these guys was talking. I was like, well, when's enough for you on this trade, right? You're up 10x.
Yeah.
Like, what did you want when you got into this? Like, speculation, right? Because all it was a speculation. It's not really a fundamental story where you're following the founder and you have a long-term story. But I think it's connected in that when's enough enough. And I think that's hard, because I think that often actually selling the asset, if it's a really high quality asset, you're kind of almost always going to lose.
Yeah.
By letting it go.
Yes.
But it is an interesting philosophical question around how long do you stay on the ride, right? Without and realizing like the gains that you've earned, or earned by sitting in.
And I think that's
and that's with everything, right? That's with private companies. That's with everything. It's not just public companies. It's just with public companies. It's so accessible.
Yes. It's easy to buy, hard to sell. And I think it's before you've bought, you've got no emotional attachment to this money.
Yeah.
You don't think it's going to go up. You don't think it's going to go down. And as soon as you buy some asset, you're like, now you've got a little bit of emotional attachment to the asset. Right. You've got this forward optimism that the asset will appreciate in value. And then if it goes down, wrong time to sell. You sell when it goes up, but it goes down, you pull it out, and you see the asset climb. You're like, oh, I've made the wrong decision. It's very hard to disconnect from that asset once you sell. So I find that very, very hard. You sort of got to forget about it, sadly.
Yeah, I think there was one guy I was listening to his interview, and he was basically like, the only way I've been able to solve that problem is I enter my trade, I set my stop loss, and I go away.
Oh, interesting.
I leave it. I go and it's going to do what it's going to do.
Yeah.
And it's a really interesting thing about managing your positions once you've got skin in the game.
Yeah.
Is very difficult, and I'd say much more difficult the shorter your time frame.
Yeah. Sure.
What I really like is when I speak to clients about their strategy for building wealth in the public sector, and it's really great when they have a cohesive mental model of how they're going to invest and why they're investing. And I love the individuals that have a very clear strategy around their individual holdings, and they're like, you know, they're concentrated, they know why they own what they own, and they're not trying to own too many things. I think it's really sensible and interesting when you build a mental model around, well, my individual assets that I'm going to buy, I'm buying for this reason, and it's because I use them, I'd recommend them to my friends and family, and yeah, maybe they're founder led, you know, and they fit with a certain number of themes that I'm interested in. And I think that's a really great way, whether you're right or wrong, because you might just have really bad ideas about what the future looks like, but whether you're right or wrong, I think it's interesting because the mental model is simple enough to execute on and explain.
Yeah, and I think that's an interesting thing. Like my stocks is 99% one stock.
Yeah, right.
I just have some old stocks in another platform that I just haven't sold.
Yeah,
but probably pretty much 100% this one stock, and I find the management of it's very, very simple. I only need to know what's going on and listen to the quarterly shareholder updates. I sort of totally understand the space. I'm not trying to manage lots of little stocks. It's just one stock that I care about. And then you get to ride the roller coaster of that stock with dramatic ups, and also dramatic downs the next week sometimes.
For sure.
But I think that long-term thing is generally, I find, very, very beneficial. You know, so overall it's very, very up.
Yeah.
But it's interesting when you talk to people about that roller coaster. Not many people can handle the sort of the emotional sides of these sort of single assets. They want to go to ETFs. They want to minimize risk, and I find that philosophy interesting. It's not quite the philosophy I'm at for. I think for my age and my stage of life. And I think it's interesting when I talk about stocks. And I follow a lot of stuff on Reddit, personal finance, bets. I find interesting. Yeah. Personal finance is very, very interesting. I find in personal finance NZ on Reddit.
Yeah.
And it's really, really interesting in that. And I sort of distilled one thing I find about stocks and finance with people is that you need to give people the right financial advice for their stage of life. So for the early stage of your life, I think people give I think it's older people giving young people advice that they've experienced, which I'd argue is wrong. It's a very low risk. Maybe you need to buy property.
Well, I mean, that's completely out the window now.
Oh, I know. And so after your medicine interview, I did a model on buying into the S&P versus renting with historical prices.
Yeah.
So you basically start saving at 20. So one person saves at 20 and puts it into the bank in a safe place. The other person rents and they pay 4% of market rates. They're both the same people. And one puts into the S&P and another one buys a house. And you can actually go back in New Zealand timeline to like 1956. I think you can go back, say you're born 1956. How well did you do?
Yeah.
Using real data.
Yeah.
And it's generally about 3 to 4 times. There's one, and then I use some Monte Carlo simulations to sort of to also show you the probabilistic chance for when we didn't have data.
Yeah.
But it was there's one time where if you'd bought just at the right time, that you could have just about outdone the S&P.
Yeah.
But pretty much every single other time it was 3 to 4 times stronger if you just bought the S&P. And I was like, it was quite amazing. So property's interesting. But coming back to that comment, I think the advice for young and old people, younger people and older people about risk, I think is really, really interesting. I think if you're young, you should take a lot more risk in some of your investments. And as you get older, I'd say maybe midlife.
Preservation.
As you get older, maybe I don't know what the number is. For me, I'm thinking 60s, maybe 65, whatever that number is. Probably go to something much, much more secure. But right now, I'm still quite happy to ride the tail of the dragon and see where that goes.
Yeah, I mean, I think one thing that I found quite interesting from listening to great investors that I like and I respect, and then also to financial advisors where I'm like, okay, this financial advisor seems onto it. And what I've noticed most is there's a lot of do what I say, not as I do advice out there. Which is, go and index and stuff and or whatever it is. And then behind, either the regulation hasn't caught up and they can't advise in the same way as they're allocating, but the allocation choices are different than the words and the outside advice. And I think also what I've learned from Howard Marks, if you don't know much about Howard Marks, you could go in a really nice deep dive on his history and all his memos he's written. And I often listen to his memos as soon as they come out. He's been doing them for 30 odd years, I think. And no one listened to them for the first 10. No one read them for the first 10, right? And there's a few really great kind of components he has that I really enjoy. One is if you want to beat the market or you want better than market returns, you have to beg to differ. But if you beg to differ, if you want to be different, you are opening yourself up to returns that are different from the average. And that's what you're doing. And then I think with risk, we think about, if I take more risk, I should get more reward, or I should give myself an opportunity to get more. And I think that dynamic is a little bit misunderstood too, because really we should be looking at risk as a probability game, right? So a good way to actually see that in action is actually in the options market. Because really what you should be going is, okay, if the market is pricing, so the options market in this case is pricing that the chance of 15% crash in the S&P 500, and this is just an example, not a prediction, was 2%. But you have information and insight that says, actually, I think it's probably more like 6% chance, right? And that's where the market is mispricing risk. And that's where your arbitrage is. Now, the market doesn't have to actually move down 15% for you to actually profit from that, right? All the market has to do is change its perception on whether that 15% move is 2% or 20%. And so I think that understanding that actually what risk is and how you should approach risk is probably really well demonstrated through games like backgammon or poker, where you can make the right decision with the information you have, but have a poor outcome.
Yeah.
And there's a really great book called Thinking in Bets by Andy Duke.
I'm 90% through that, and that's really, really cool.
It's a phenomenal book, right?
It's very, very cool. And you're thinking, how can you win? How can you be better in poker? But it's basically coming down to, am I always making the best decision at the time? Or am I...
With the information I have.
With the information I have, and I love how she talks about what's the probability of winning a coin flip?
Yeah.
And you'd first say 50%. Well, so I haven't told you anything about the coin. Did you know whether it was a coin with heads and tails?
Yeah.
How do you know it's two heads? Is the coin fair? Is the coin actually got three sides? I know that sounds weird to say the coin doesn't have two sides, but you're actually you've got to look at the information and how it's flowing. I thought it was a great book. And you sort of just look at it, it's like, how can you win a game of sort of strategy and chance and then biases? Many people have biases.
Yeah. And then if you kind of take that to found a land, right, and build a land, when you're building a business, you've built a bunch of stuff over the years. I'd love to get into that next. And it's like, how do you remove the outcome from your identity? Right. Yeah. And actually really focus on what's the best decision I can make with the information I have. And actually, if I don't get the outcome I want, it doesn't mean that who I am as an individual is impaired.
Yeah, you talk about some interesting things, especially identity. Identity, who we are. Again, why I hate that first question that we asked TLDR.
Yeah.
Who are you? I'm just like, well, actually, my identity is very fluid at the moment. I'm not John from Company X or John from Company Y or John from Company Z. I am many things.
Yeah.
I'm always doing things. So I'm not paid by anyone to do something. I'm paid by me to come up with the next idea and go somewhere. So talking about decisions and identity, I find that interesting because normally we tie identity to company. But I suppose maybe our worth, that we've made good decisions, the information that we've had, I think it's always fascinating that. Yeah. And I think the ability to say you were wrong in a decision.
Yeah. Yeah, or what that you made a poor decision based on the information you had biases and you just went with it. Yeah, I mean, I think, yeah.
And I think that's hard too, because I think the biases are hidden.
Yeah.
I have a toxic trait that I love saying. I got it from my ADHD friend, and she says, I've got a toxic trait is that I can believe I can build anything. So I look at something and go, I can make that. Actually, it happened today. I was down at Daily Bread. There was an American sitting next to me, and he had a one of those Whoop bands.
Yeah, okay.
It's one of those biometric. Everyone doesn't know, a biometric band that tracks everything. And I was thinking, I wonder if I can make that. I wonder if I can build that myself. I bet you I could get the electronics to do that. I wonder what it tracks, and then I can feed it into AI, and I can actually build my own Whoop dashboard, and I wouldn't have to pay $30 a month. Toxic traits going there. So I think when I come to decisions, I would believe that I was making the right decision at the right time. But then you've also got to realize these toxic traits, or that I call them a toxic trait. It's just the thing is that I can build everything.
Yeah.
I also know I've got a bit of a trait where I struggle to trust some other people because I like to be in control.
Yeah.
And that's probably actually coming down from my childhood.
Okay.
Is that sort of like if I'm in control, I'm safe.
Right.
If I rely on some people too much, I worry that I can't get to the solution that I need to be. So I have these probably undisclosed traits in that decision. So it's still, again, I believe I am making the right choice in my decision, but we're all biased.
Yeah, I mean, I think it's trying to get back to that, because it's like basically unconscious bias.
Yes.
That's really, like in its simplest form. And I think it's like that whole be true to thine own self and also run your own race, which I'm just constantly telling my kids. Just run your own race. Don't worry about what your sister just got.
Yeah.
Right? Like, you're doing your own thing. You're on your own path. Let's stop looking at what they've got. Because actually life isn't fair as well, by the way.
Yeah, exactly.
Right? And then...
Something was like that. My daughter got braces, and he's like, "Oh, I want braces too." Like, you don't need them. You'll get something else.
Yeah.
Just stay cool.
Totally. And then I was talking, we were talking to my wife, and you have kids, so there's this pressure, right, to I think feel like you've done enough, right, and there's also what I should want to do, and sometimes my wife, she wants to, let's say, have family time. But actually, that might not be what she needs now, but it's what she feels like she should want.
Yeah.
Therefore, she's vocalizing that that's what she wants. And I'm like constantly going, is that actually what you want? Or is that what you think that you should want? Because there's two different things. And I think it kind of is attached to unconscious bias too, right? Yeah. And around outside influence. And that's what the whole book around Thinking in Bets is around, is like allowing outside influence to impact how you view the outcomes of your decisions.
Yeah, interesting point, isn't it?
It is.
Very interesting point.
Yeah.
And I think you don't really know this until you've actually had to make really large decisions. I don't know if you make big decisions in the household, but when you're dealing in a company, our company at the peak was around 70 people back in the day. So this is 2014 to 2020.
Is this asked nicely?
Yeah. So this is a company founded by Aaron and I in a shed outside the back of my house, and this company grew. And I think when that company starts, it's a hell of a fun time, I tell people, because you get to make a lot of decisions quickly.
Yeah.
You've got to make thousands of decisions a day. Well, maybe it's true, maybe it isn't true, but there are a heck of a lot of decisions you have to make every day. And I think as that company grows, you start having to make very, very big decisions. And I think I was talking to Aaron the other day when we changed the direction of the company, and I said, I'm never sure if it was the right idea when we took the pricing off our website.
Right.
So we had sales people. And we had tension over a price on our website, which was much lower than what a salesperson wanted to sell it for.
Right.
And a salesperson has to make so much money a year for them to be effective. And then you have these prices on the website which didn't quite marry up. So it was like, I still come back to it, was like, was that a good decision? There was these things you go back and you were never really sure about. Yeah. There were many things that you went through. You're like, oh, was that a good decision? So I think that's always interesting, and I think when it's a big company, then you like and big decisions, you can really reflect on them. I can't really think of much at home at the moment, whereas was it a good decision to buy a new car? Oh, it's good enough.
Yeah, that's quite an interesting one. I think your story around Ask Nicely, I think would resonate with a lot of founders, especially founders where they've raised capital and grown quickly.
Yeah,
and I've always thought about that, and I was having a lot of revelation around this around. Reading that book, Annie Duke's book, and that was when we were selling the gaming business to another company, and I was obviously thinking about all the pathways that we'd taken, all the decisions we made, and I kind of came to the conclusion that actually you want to optimize for the least amount of decisions possible. Because I actually believe that you get decision fatigue.
Yeah, I think that's why I struggle with. I think that's actually what I ended in the Iceland journey. By about 2019, 2020, I'd come home from work. It wasn't a particularly stressful day at work.
Yeah.
Going to work, I get to build stuff, got a team around me.
Yeah.
And you'd sort of come home and sort of lie on the couch for 5 hours. And it's like, what's wrong with me? I love to work till midnight sometimes. Or I love to do stuff. I love to be in my shed woodworking. I love to be reading. I love to be out and just come there and lie on the couch in some sort of state of burnout.
Yeah.
Or, some sort of I don't know, distress of some sort. And it's this constant decision fatigue.
Right.
And I had one way of coping it really well. It's like if we had a board meeting, I found they were very intense. And the board meetings were on site, so you come out of the board meeting and a couple of people goes, I hope that goes, how did that go? I'm sure it good. Always say that.
Yeah.
And then I've got some questions and I say, look, I can't really respect you. It's a great question. I just don't have the emotional energy to deal with the question at the moment. It's amazing how much energy it will withdraw. And so I had a way of being able to defer decisions, let people try and make their own decisions. But I do find there's a lot of emotional fatigue in that.
Yeah.
And so maybe leads to a little bit of burnout when people do it. I love answering people's questions. It's the most fun thing ever.
Well, and we often feel like we have to make a decision or take a position.
Well, it just comes back to what you talked about. It's your identity.
Yeah.
You want to be helpful. I think people that start businesses, my personal lens on that is if you want to be successful in business, you want to try and help someone. If you're trying to help someone, you're sort of starting a business.
Yeah.
So I think helping your staff make decisions, going through there, I think it's just part of the thing that you do.
Yeah.
Maybe you've been through a different life, but or a different ride. But I found just about every company of I'm trying to help someone, and it's turned into a product, or it's turned into an idea.
Yeah, I mean, I think so. I think that's definitely where the gaming business started. Is I was like, I associated my progression as a human with my esports playing and going far in esports and professional gaming.
Yeah.
And it taught me so much about leadership, about decision making without complete information, so on and so on. And I was like, everyone should gain from gaming. Is kind of how I thought about it. Now, I think I actually, in retrospect, went on a little bit of a wrong path, because I then incentivized people to play games and these quests that they were doing. And the esports tournaments, I think, were good, but we were very focused on incentivizing people to play when if they were into it, they were already enjoying it. You know what I mean? So I think we were focused on the consumer when actually we needed to be focused on the game developer more.
Yeah, okay.
And we spent a lot of time thinking about the gamers and really giving everything we had to the gamers, and we gave them so much. But, actually the people with the real need were the developers that were trying to fight with the big developers that we were actually supporting, because we were supporting all the big games. And the power dynamic there was interesting too, because you were at the whim of the big developers and you were supporting them. So it was a real interesting learning experience of thinking about, were we actually solving a problem? And were we framing the problem in the right way? Right.
I think it's thinking in bets, isn't it? And I think the constraint you have in business is time, and time is money.
Yeah.
And the amount of money is also the amount of time that you get, and also we I remember at our site we described and how many swingers at the plate we got. It's baseball terminology.
Yeah.
How many times can we sit there and swing and strike out?
Yeah.
And in your analogy there, you're talking about you're only placing one bet, placing on the gamer, not the developer, and in the time, it feels like the time constraint potentially came in, and that's probably I wouldn't say a fundraising problem, but potentially it's cash that you can only place a few bets, which is a bit tricky. Well, it's hard to get that bet right. I think even in business, what do we say? If you probably swung and struck the ball 3 out of 10 times, you're doing really well. You're a legend.
Well, yeah, I mean, for sure.
Sometimes, because we forget the other 7 that we didn't quite make it, but we found the 3. As long as you find the 3.
Well, I think that kind of came, I definitely agree with you. And I think that the learning there for this business was one of the principles we have is live to trade another day.
Yes.
And what I realised...
Merson said that too.
Yeah.
Really believe in that too.
Yeah, and what I realised was as long as you can keep playing the game, like you're actually
the game of life or the game.
The game. Well, you play different games.
Any
right?
game.
We played
all the games.
We're playing 5 or 6 games at once, right?
Yeah.
We're playing our household game. We're playing our career game. We're playing our business game. Whatever it is, right? You want to, you're trying to avoid not being able to play the game. It's the main thing in my view now, because I look at the Uproar journey and I go, well. Actually, we sold out like 18 months before like gaming and our product, because there were companies that were like way down the list versus us. Now, I think there's also an interesting question around you can build a shitty business and and some investors can have a really great outcome, but it's still a shitty business. Okay, and a lot of those esports companies were shitty businesses. Well, our business was a shitty business. Now, some of them went public and they were worth about $300 million at one point, and they had zero distribution compared to us. So if we'd if we'd lived to trade another day into that COVID period, like we were primed to SPAC,
Oh, brilliant.
But we didn't get to it, right? So I think that's quite interesting. And then I also reflect on it and go, but none of those businesses that actually listed were any good. And basically a load of retail had to hold the bag on really shitty businesses.
Yeah. And I think it's, I think the thing is, you can be right one day and wrong the other. And time is always a funny component. So I might sit here and guess on about Rocketlab being amazing. And in the future, it could be, I hope it's not going to happen. But, time will change the answer to anything you've said. And same with your company, you might look at these businesses that may have IPO'd or SPAC'd or gone really big, and now they're actually they've all been usurped by something else. Yeah, and it's funny. It's like you were saying they're a shitty business, but they may have also turned out to be a shitty business. And this is our cherry picking of data.
Yeah,
we love to say, I saw it really high. That outcome's really good. I am so smart, by the way. I'm doing that, aren't I? In certain things, I'm so smart up here because of the outcome. And then you sort of come down here, and actually today they're falling away.
I think what I love about public markets is that both people can take opposite positions and still, at the same exact moment, and both be profitable.
Yeah, it's crazy that I find that strange.
I find that really great because I think it's extremely humbling.
Yeah,
because you will get humbled.
Yeah,
I've always been really kind of like fascinated by markets and how actually the feedback loop you get in public markets is really real.
Yes.
And I often say to people look, for some reason, and it's because of the 80s in New Zealand, here we prefer private, unmarked assets. And it's because we don't have to deal with the shock of it changing on a day-to-day basis.
Mm-hmm, mm-hmm.
But underneath the hood, there's volatility. Mm-hmm. It's just that you don't get to see it.
Yeah.
But then when you want to sell, you're then completely exposed to
the whole emotional side. And we're talking, you're probably much talking about property.
I'm talking about property. I'm talking about private assets too, right?
Yeah.
Like that, there's a lot of allocation to private assets, property, SMEs.
Yeah.
I mean, and they're an interesting space right now. I think there's a huge opportunity there. But they're basically unlisted, so you don't get scored every day. The interesting and humbling thing about public markets is that you get a scorecard every day.
Mm-hmm.
And I think that's quite interesting. I think it's a good teacher. Just like a game like backgammon and games like poker, where there's basically skill, but there are also uncontrolled variables that you have to manage. Mm-hmm. And I think it's a great teacher. And what I like about the concept of poker is you basically get to hone your decision-making skills in a game like that, or backgammon.
It's quite funny. I feel like I try one of my personality traits is wherever everyone else is going, I move the goalposts and I make my own goalposts. So I love what you're saying. I think it's very accurate. But when I think about how I play the game, it's like actually I will do it my own way, create my own things, and then I'm more passive. In the sense, so in the day-to-day decisions, I sort of choose to make none. I choose to ride the long wave. So I think it's really fascinating the way I choose the game. I try to strip all the complexity out of it and just say, what's Peter doing? He's all in.
Yeah.
I have these filters. And then if I was trading other markets, like if I was trying to trade oil and gas right now, boy oh boy, am I taking the long side? Is it going to hit 120? Are we going to go to a war? What's the scale of this? Can we get ships through? Can they get insured, etc.? It's like, man, that's a tricky game.
Well, yeah, I mean, I'm lucky enough to have some really good fund manager friends and allocators of capital that run real big books.
Yeah.
And I was having a conversation with him this morning, and he runs a really important book. And we were chatting on the phone, and I was going, I'm surprised you're not really going on about about markets right now. And he just goes, look, it's just too hard.
Interesting.
It's just too hard to really take a strong position right now because most outcomes are quite binary.
Yeah.
And I thought that was quite interesting and wise. Yeah. Right, because we're talking about AI automation and agentic kind of dynamics, AI displacement. We're talking about all these adjacent things that are more in my field of technology in a time where, you would think these two people are obviously going to be talking about oil or what's going to go on in the market, what's the S&P going to do. And I kind of said to him, I said, like, are you putting your head in? I kind of said to him, I said, are you putting your head in the sand? And he goes, well, it's too binary right now. What do I do?
Yeah, I think it's what an interesting question. And I think it's something I've even seen with normal companies. So if we're moving the topic onto AI, it's like how not only is how these people running these books working, how they're employing AI, how is it still they believe the outcomes are potentially predicated on what people decide to do. Something you can't model. What's America going to do? What are all the other countries going to do? What's Europe going to do? How is Iran going to react? Can you put that into AI? Or what's the models doing? But I think you can even bring it back to businesses now. How they're approaching AI. I saw a friend walking down the street yesterday, and they run quite a large business in New Zealand. And I said, how are you guys going? What are you doing? He's talking about what he does. I said, oh, that's really cool. So you're using AI much? Oh, a little bit. Do you use Claude Code? I said, oh, no, we're not really using it. Do you have any budget? Do you real simple question. Do you pay, you talk about maxing out your Claude Code Max plan, and that's about $400 New Zealand for a Claude Code Max plan. And
we have that across our entire team.
So this is an interesting question. So you're a smaller team, I think. This company's quite a big team. So do any of your developers have, Claude Code Max? Oh, no, none of them do. Oh, that's interesting. And so I showed them, I said, by the time you get home, I bet you I can build your software for a smaller cohort of your business, not for the large ones, but for the small one. I bet you I can do that in one shot. By the way, this is my personality, by the way. I'm not trying to be a dick here. This is just my personality. And he respects me for it. And I said, I'll go home and I bet you in one shot I can put a prompt through. And it was about 30 lines for this product. Sorry, I'm not really specific on the product. That. About 30 lines of the product, and it spat it out. And I was like, man, this is good. This is really good. There's issues with it. So I sent him a video and says, I think the whole team needs to basically be buying these big plans and figuring out how to combat about some random on the street being able to get you a full working demo in less than an hour.
Yeah.
And he was a bit like, what are we going to do? And so I find this is such an interesting time for New Zealand.
Yeah.
You're leveraging it.
Yeah.
I'm leveraging it up to as much as I can I'd call myself a solo developer these days.
Yeah.
How can I get as much impact for every single second that I sit behind that screen and for when I'm not sitting behind that screen?
Yeah.
And then how do these larger companies start defending?
They can't.
I just wondered, can
they're impaired. If you're past Series A now and you've raised a shit ton of money and you have the old operating model in your regime, you are the Titanic going towards the iceberg.
Oh, that's a hard one, isn't it?
Look, I can say that with a lot of certainty because the great thing is we can look at leveraging. Let's look at capital in its old. In the first iteration of capital, it was all around lending.
Yeah.
Okay, and that's why banking and bankers became the most dominant and leveraged set of humans, right? And now you've had this wave of technology and computational capital. So we had capital, then we have computational capital, and then we have human capital. And you know this as a founder, right? Everyone goes, hey, my biggest problem is I don't have enough capital. Well, I go, well, what type of capital do you need? Well, I need more capital. I need more money. Because if I get more money, what do I get? I get more output. I get more production. I go, well, what if you could take some combination of less capital, bit of human capital, the right human capital, and the right computational capital, and you're getting 8 units of productivity versus the old regime where you're getting 3. So
that's a moving goalpost, because we're talking about 8. You talked about 8 units of output there, right?
Yeah.
But everyone else is now at 10. Yeah, you know what I mean? Because everyone was doing human, so human capital was now outputting 3, augmented human with AI 8, and now everyone else is chasing after you. So I hear what you're saying. It's interesting how the goalposts are moving, isn't it?
And so it's all now about, well, how, and it applies to and that's why property is so distressed, because it basically goes back to how encumbered are you with basically debt and obligation to continue to pay high prices. So, I'm in a 7-year contract with Salesforce and it's costing me $200,000 a year. I have this loan and I'm paying 5.5% a year.
Yeah.
I have this team of 12 support staff that I just hired at the start of the year because we're growing, and my business is around it because I haven't quite got my head around how to actually operationalize and execute on computational capital in a real way.
Yeah.
Because
So when you say computational capital for other people, we're really talking about AI. We're talking about AI, or
I'm talking about data centers. I'm talking about software.
You're talking about software.
I'm talking about software in general. I'm talking about robotics. I'm talking about like any sort of automated process or system that sits in a computer that you leverage to get more output.
Yeah.
So I think AI is interesting because it's like, I think it's turned on a lot of light bulbs in people's heads, and they've realized like 30 lines of prompting and you've got a MVP that seems interesting, right? Now, that's just the start of the game. Go deploy it. Go now scale it up to 100,000 users and make sure that you've got all your data structure sorted and you've got your backup sorted. And, there's this whole...
There's layers to it, and that's why... we're probably not going to be one-shotting Salesforce tomorrow.
No.
But I think you've got to remember, I feel that we're also very biased by looking in the rearview mirror. Our prediction of the future is what we knew yesterday. Yeah. We're sort of sitting in the fastest car you can think of. Let's say a McLaren, just for a random car. You're sitting in a McLaren and you look in the rearview mirror and you're like, man, how do we do the maintenance and how do we scale this up? And we're going to need system engineers. When you look at the front window of the car, you're like, this software, this AI is pretty much doubling in intelligence every 90 to 180 days.
Yeah.
So that's either 2, 4, 8, 16. That's either 16 times by then in 12 months, or it's 4 times. It's one of those numbers.
Yeah.
If it doubles, then it's 2, and then so it's between 4 and 16 times it's going to do it in the next 12 months.
Yeah.
So looking forwards, you're like, I see the problem, but I also sort of see the intelligence of being able to solve these things. It's this shit rapidly changing. I'm sort of betting on it. If I deploy something or make something that's not quite good enough, in 3 months it's going to be a lot better because I can just run another layer through it.
Yeah.
So I was talking to my business partner about Salesforce today. It's like, how is Salesforce going to survive this new layer? What are businesses are looking for? What will be people buying Salesforce for? And I think how will, for example, like Salesforce, how will they manage growth? Because it feels like, and I'm seeing this now. I'm talking with a guy runs a construction company tomorrow, and he's basically started building his own AI tools and actually stopped employing someone else using other people's tools. They're starting to bring tools in-house.
Yeah.
Maybe there's that long-term thing, but if I'm looking in the car out the front window, I'm like, I think you can solve it. It's scary. And so for growth, everyone needs a bit of growth. Everyone wants growth. Salesforce wants at least, I know what they actually are targeting. They need 10% growth. These big companies want 10 to, there's the rule of 40 in SaaS, either 40% growth or 20% growth, 20% profit. That's the rule of 40 or just 40% profit, no growth. Happy with that. Good company. Rule of 40.
Yeah.
And so, maybe if we use the rule of 40, maybe we want 20% growth and 20% profit. And I'm struggling to see how people will continue to buy the extra tools that they need for their desired growth when they can start doing that in-house.
It's interesting, isn't it? And I think that it's hard, right? And as someone that participates in public markets, but also is really trying to also work out, well, how does this what's the implication for SMEs and the opportunity that they now have, right? And I say it's kind of hard, right? Because actually, you know this more than anyone. Good software is nurtured over time, right? It's a garden that you grow, you water, you work on, right?
That's my last 5 years of building GoodSign. It's I have nurtured that thing and tended that and cared for it so carefully.
And now GoodSign's interesting, right? So I want to get to the SaaS.
Oh, sorry. Yeah.
No, you're good.
Yeah.
But I was thinking of GoodSign when we were starting to get down this level of thinking, and I think that, I think what we're underestimating with AI is like the actual economic output of agents in the future. And then when you think about SaaS, I think you go, well, is the company nurturing this piece of software to a point where actually, because vibe coding is giving you kind of that, even if you one-shot something, you then need to nurture it going forward. So does the business have the capacity, headspace, willingness to nurture that garden going forward? And that'll be a big decision factor for whether or not they churn from a sales force.
Yeah.
Now, what I would say with SaaS is, right, or production of tools now, SaaS tools, and GoodSign, maybe this is an opportunity for GoodSign, and we think about this because we have a finance API within our group for building your own, well, for wealth managers mainly and advisors to build their own fully customizable, holistic platform for their customers, right, where they can bring all the assets in. And eccuity actually has a really amazing asset aggregator inside it as well, where you can add all your assets and liabilities in one place and really know what's going on.
Oh, look at
and I now think a lot, maybe this is a thing for GoodSign, but it's definitely a thing that I think about with distribution of product, because now it's all about distribution, is what are the agents choosing to adopt when you write a prompt? They're all choosing Stripe as the preferred API.
Oh, that's fantastic, isn't it? You did right. So if you go to deploy some software, you can say, what's your Vercel key? Does it say it's AWS? What's the duration? When it thinks of e-signing, it's it's smart enough to know costs. So that's actually quite fascinating. What is Claude going to say when it does that?
So when someone
I have not thought about that. I've seen it, but I've not thought about that. And I think even the more amazing things is that your agent will start signing up for stuff that you didn't even realize. It was just, I've just found it on the website. I've already signed up. I've already created your API key.
Correct.
I've used your email address. You've used my email address.
So what's the economic output of the agents that we're deploying? And I think we're underestimating what that does for GDP ultimately. But it also, as a SaaS company, as a developer building software, is what are they choosing to adopt? How do you make sure that you are the agent's preferred?
It's quite funny. Agentic SEO, whatever it is.
I just had someone on actually that was talking about answer engine optimization, I think it's called.
Oh, okay.
So it's basically that. We were AEO, and we were thinking about what does that do for reputation? What does that do for brand building when someone searches you up? What does the agent think of you?
Yeah, because I've connected my Claude to my analytics platform, just with an API key, and now every day I just go, how are my flows going? How's the website going? How's our new landing pages going? Tying everything back.
Yeah.
And it says, there's more ChatGPT sessions coming through, and through your landing pages, you're getting recommended by these engines. I was like, that's pretty interesting, isn't it? So
food for thought on that one.
Food for thought. That's a good one.
So what does success look like for you in the next 5 years? Has it changed now? Because you are enlightened by this movement, it seems.
I'm triggered by the word success. I don't think anyone's successful in this sense. I think success for me could be, you could look at finance, you could look at health, you could slice that by many dimensions. So I'm very careful on the word success. But it was New Year's, and we're with my family, we're at the beach, and what are your goals this year? And my daughter was talking about doing ballet, and I'm not sure what my boy said, and my wife, and then someone else says, "What's your goal, John?" I was like, do I have to have any goals? And I think it sort of just came down to health. A lot of success in the future for me is just trying to get through the next how many years, 50 years, 40 years, I don't know how long I've got, how many days I've got left to just to fight another one. But just trying to be more healthy.
Yeah.
I was out on a 30k bike ride yesterday. I love that. That was awesome. Actually saw Matt and Carl on the bike ride.
Oh, yeah.
Just down here. And so if we brought it back to 5 years and I try to answer your question, I'm fascinated about harnessing AI. I think I don't know if I'd achieve this goal, but I would love to see. And I'm probably not the right person, but I am a bit of a troublemaker sometimes. But how is New Zealand going to increase GDP? But also increase not only GDP for fewer people, but also try and keep the people we've got and produce the output of people, because we can increase GDP people and still have high unemployment. That's what we're seeing in AI. I think there's a real worry that New Zealand will miss out on the current AI wave. I know many people are there, but also many people, like your friend managing the books, are not really able to employ it. So I think it really worries me where we're going with. We're going to see these knowledge workers are going to be displaced by agents, or whether they're going to be empowered by agents, where they can leverage agents, and where does New Zealand sit on the world stage? I think these are questions that need to be answered. Someone needs to make some noise about this. And like I said, I showed you, I created a one-shot prompt of a really large piece of software, really just trying to show, hey, this is just around the corner. And I think even AI and learning is probably the other thing.
I think about that almost every day of what am I doing with my kids.
So where do kids going? I was like thinking, my son's 14, so last night I got Claude Code on his Mac.
Yeah.
It says, here it is. It's like CD into this directory. It's like CD, change directory. Okay. In KDIR, make a directory. Okay, I'm making directory. Now open Claude Code and
build whatever you want.
So it's whatever you want. It's a hard bit. But I said, I've got a question for you. I says, why do we only see one side of the moon? So I asked Claude Code to do this and make a visualization. So Claude Code spins up, beautiful visualization. Here's the Earth spinning, and here's the moon slowly coming around there. And you can sort of see it's called tidally locked. I said, ask Claude to visualize why the moon is tidally locked. He types it in, and you see that the closest side of the moon is much higher gravity than the furthest side of the moon. So it distorts the moon just a little bit. And so anytime the egg shape starts to change direction, this is a little visualization. He can see it.
Yeah.
He can see that it stops it rotating so much. So you get the moon rotating at the same speed as it goes around the Earth. So we only ever see one side of that. And then we went down the rabbit hole of talking about how tides work and how the moon affects the tides, and how the sun works, and then how I'll get to the end of my story in a few seconds. But how the moon moves further and away from the Earth, and then how we move closer and further away from the sun as we orbit the sun. And then I said, well, how about making a game? So we made a game where you have to just guess which of the Jordan shoes. So it showed you a Jordan shoe. And so is that a Jordan 4 or a Jordan 7? And I said, publish it to Vercel. I'm going to put it online. Just types it in. We created an account in Vercel in 1 minute.
Yeah.
Put it online, and then I think it was Bjorn-Jordan game. Vercel.
Yeah.
And he's like, you can share it with your friends. He's like, oh my God, I want to make a game. So I think his mind had lit up.
Yeah.
And so I think AI for learning, it's like, and he just said to me, we're so cooked. That's the first thing came out of his mouth once he realized this. He's like, we're so cooked. How am I going to get a job? He instantly got it, that his era is in trouble, I think. And so, I'm really like, he's got, what would it be, 18, he's got 4 more years if I can get him to figure out how to be, I won't say digital native or an AI native, but how to leverage these tools and how to think with the tool. Maybe he has a chance of either building something himself, following his dad's footsteps.
Yeah. Well, yeah. I mean, that's why we named the company Eccuity, because we believe that everyone has the right to build wealth for themselves.
Yeah, there we go.
They have the freedom to choose how they get there.
Yeah.
Now, Acuity is a play on words between acuity and equity.
Oh no.
And I think the solution is, and I think about it for my team, especially because those are the people I can influence, right? Like I'm a big believer in not being idealistic, but actually trying to engender change through your own influence.
Yeah.
Is empowering people to earn equity.
Yeah.
Somehow. And that could be through creating equity, or creating capital.
Yeah.
Which comes from building your own thing.
Yeah. And he's also a Rocketlab investor too. Also, so it's curing equity as well.
Nice.
And that one.
So I think equity ownership is important because at the end of the day now, a dollar for an hour or whatever it is, an hour is different now.
An hour is weird. So for my whole life, I sold hours. But now if I can run 4 or 5 AI agents that are running in 100 times faster than a developer, that's 800 times, nearly 1,000 times productivity. How the hell could I sell an hour for, I think I charged $140 many years ago, 2014. Maybe 180 I might have charged. Quite my back in the time, but I was available. But now that seems weird in terms of the output. Well, why? What is an hour? What is productivity? Is it like just a sec? I burnt 10 million tokens. Should my price be how many tokens I have deployed in the right ways for you?
Yeah.
So it's,
why is Y Combinator backing AI native agencies?
Yeah. Not sure.
Would they have ever done a development agency or a marketing agency 10 years ago? Hell no.
No, I'm not sure.
So it's interesting, right? And that's why I'm like, well, if Berkshire was created today,
yes,
what would it look like?
Yeah.
But
I think Berkshire operates on that simplistic rule, don't they? They just buy companies with I hope I get this right, with durable revenues. Things that aren't going to go away. I mean, I'm probably treading on your feet here, but
no, it's good.
I'm probably putting that in the most simplistic way I can think of. How are they thinking? It's like you're going to buy Coca-Cola, they're going to buy insurance, they're going to buy businesses. Is it slates? That's the candies, the things that people will always consume.
Yeah. So, well, I think it's interesting, right? Because I think they've marketed a very simple story and narrative, right? Of, hey, we buy great businesses and this thing. But what have they actually done, right? What they actually were able to engender is a couple of things. One is that they told the market how they would value their business and how the market should value them based on a discounted cash flow model.
Interesting. Yeah.
So they informed everyone, you should value us this way. And this is why we do it, and this is what we believe in. And here's a different person that has validated that in the form of the Value Investor book and Graham and Dodd, and that's why you should trust it, because these guys are really smart. They're all about value investing,
and they never really sell their companies, so you can't really hold a stick to it, can you?
And that's right. And what did they do? What they did was they go, hey, market, here's how you need to value us.
Interesting.
And what we need to do is we need to buy more than 80% of lots of businesses to increase our earnings and juice our earnings.
Yeah.
And then what we're going to do is we're going to engender a really great culture. We are going to have a lower cost of capital for all of our businesses because of us. And we're going to create this thing called float. What is float? Right? In their insurance business, they get to basically get float. Float is what they need in order to basically, if there are lots of claims, they're going to use the float in order to service those claims. And what is float? Because they also say, hey, don't use leverage, right? They're always, don't use leverage, don't use leverage, don't use leverage. Well, guess what float is? Float is leverage without any of the downsides.
Yeah, interesting.
So what they actually really learned or worked out, and it was Munger that worked it out, was a couple of things. One, start buying really great businesses that can compound.
Yeah.
Right? And number two was, hey, if we have this thing called float, we have all the upside of leverage, but none of the downside.
Yeah. But they would have to start, if I recall right, again, I'm very thin on this topic, but they bought insurance. They got into insurance, stumbled into insurance fairly early on and found out actually this makes quite a lot of sense, and they bought into it, and they have this sort of excess product that's float, isn't it? They've got all this float. What do we do with it?
Now we're going to invest it.
So it's sort of, I'm not sure if it was like, hey, just a sec, how do you buy good businesses? And if we have float, we can do this. And if we have insurance, it feels like if you probably dissected it in a very linear flow from the start, you're like, buy good business, insurance, makes money. Here comes float. Next thing is the side effect of that by the businesses, then control the narrative.
Yeah,
to the market,
control the narrative,
and then through how many years have they been in business? They've got this whole thing tuned, haven't they? Great business, by the way, but that's quite cool, isn't it?
Well, yeah, try unpicking it and selling it for what their market cap is, right?
Yeah.
Like, go and look into what those businesses actually are doing and how you could sell them. Could they be sold? Could you unpick it all? It's quite an interesting kind of thought process. But I think what they did was that most debt is tied to the market cycle, whereas float's not.
Yeah, gotcha.
So they had different failure points, right? For them to fail, they'd have to have the market go down a lot, and they'd have to pay out insurance premiums. So as long as the failure points, whereas if you've got debt, you're exposed to interest rate changes, you're exposed to market cycles, and maybe, you get called on your loans and you have to pay it all back, or, there's all these failure points that are actually connected to the investments or the assets you may hold. Whereas float wasn't. Float was, hey, if there's a lot of natural disasters or car claims or health claims, then we're going to have to pay out here.
But I can imagine they'll be diversified in that as well, so they wouldn't have too much insurance where they could be exposed to natural disasters, car claims happening all at the same time.
Exactly.
Too bad. So they're probably very smart in how they've managed that risk, isn't it? So you have a very low risk float.
That's right.
Like if you're insuring houses in Christchurch, that was a bit tricky. And also, again, they've also got sub-insurance, or whatever you call it. They've got their insurance is insured.
Yeah, correct.
So if you get too much of a claim, they can put the hand.
Yeah, you've got reinsurance.
That's what I'm looking for.
Yeah, so I think that they have been honest in saying, hey, we had luck on our side. We've been lucky enough to not have a disaster hit where we couldn't sell.
Yeah.
And then also, because they controlled the human capital part of it, the narrative of the market, the narrative of them, and how the market trusts them, when things go wrong, they get the phone call and they get the better deal.
Yeah. So similar topic. How do you feel that AI and the future of, and I'm saying New Zealand is going to play in this current thing? I saw that. I've always wanted to talk to you about this, but there was an article recently on Citrini.
Citrini. Yeah.
And I found out
2028.
The 2028 article, and I read through that and talked to a few people about it. You've talked about it, and then I found out some of the authors of this were actually shorting tech stocks.
Yeah, they're already short.
They're already shorting it. So this article played into their hands.
Yeah.
But I think it's fascinating food for thought. And I was like, oh my God, we're cooked. And then I'm like, no, I don't know if this. I've flip flopped several times on this.
Yeah.
Where do you think the white collar work's going, knowledge work's going? Where do you think New Zealand is?
I think you have
positioned in this for the next 3 to 5 years.
Well, I think you have to be an equity owner. You have to work out how to have skin in the game in something that's bigger than yourself.
Yeah.
That's the key, I think. Unemployment, knowledge work. Look, I read that those research firms are always pumping out really great articles to support their short positions. And then you have Citadel coming out the next day and saying the opposite, because guess what? Citadel they're the market maker. They don't want to see the market fall. So, the whole Munger thing around show me the incentives and I'll show you the outcomes.
Yeah.
It's very much that. And I think that, the truth is often two things can be true at once.
Yeah, I that's interesting. I believe that sometimes you can never know whether someone was wrong or right, whether there was what actually happened, even in the real world.
Yeah.
There was a fight between two people.
Yeah.
You don't actually know what the truth is sometimes.
Yeah.
If you talk to both of them.
Yeah.
So I agree in that. What is truth? Both sides can be right.
So
then if you distill that, if we take all that out, where do you think we're going in the next 5 years for
knowledge work?
For knowledge work. I'll keep it to New Zealand, maybe just to
so here's my Citrini version of this whole dystopian future. Is I would say, given what I've listened to, is that large public companies, banks, large insurance companies, basically if your market cap is greater than, let's call it $10 billion for argument's sake, I would bet that within the next 5 years they are mandated or will face fines if they reduce their headcount by more than X percentage.
Oh, interesting.
So I think universal basic income will turn into large companies are forced to maintain headcount even if they're not even using it.
Wow. That's very inefficient, isn't it? Isn't that anti-capitalistic? it's very inefficient, isn't it?
It is, but if you're JP Morgan, and the reason I cottoned onto this dystopian kind of idea was that he basically said, yeah, we know that we can get rid of staff, but we're not going to, and we're going to do it slowly because that's good for humanity.
Yeah.
It's not just good for humanity, it's that there's been so much leverage built up into the system that you can't let all your staff go because guess what? You are the one that wrote all the loans to all those mortgages that those people have to pay back.
Yeah.
So like the whole system, capitalistic leveraged financial system, is built on a lot of debt.
Yeah.
And that's why I've always been a massive advocate for not having any debt if you can.
Yeah.
Because
this is one of your biases again that you probably don't realise. Making any decision that you probably don't reveal is like, actually, if I'm taking on debt for this is bad. We're not going to take this. We're not going to take this loan because I don't want to do it because I don't want to be in debt.
I have a massive bias based on my upbringing around debt.
Upbringing, interesting. Yeah.
I do.
Yeah.
But I also recognised early that actually, like, hey, I think if I don't have debt, I have control.
Yeah. It's another one. Again, you want control.
Yeah. It comes down to that.
One of our shadows is like we need to have control, and it's maybe because it's maybe not that we don't trust people, but there's just something that's maybe a control speed.
Well, the whole thing, and that's what I found out because it was this summer that I realised and had the revelation because I read Munger's biography and I also read all the essays, Buffett's essays, over the summer, and it was where I realised that the way they'd done float, they weren't going to get carried out on a stretcher basically by having debt, whereas basically debt opened you up to the lender basically gets to choose whether or not you play the game.
Mm-hmm.
But yeah, I mean, I think the dystopian future is essentially large companies, and this is negative to their market cap because essentially, like you say, there's going to be all this unnecessary cost structure built into their business because of regulation, essentially.
So you're on one side, you're on regulation. How do you feel that? So I think it's one part of the picture. How do you feel that? Someone described AI as an exoskeleton that allows me to lift 10 times my weight. That's my
Cyborg. My Twitter handle is Cyborg Charlie.
Oh, there we go. So that's exactly how you feel. You feel that technology has been my power and essentially just only got better.
Yeah.
If we talk about software development, I now build code without looking at the code. I let it do the work. And it was like people might say you don't look at the code. Well, I says when I was coding, I wasn't looking at the assembly language, and if I was looking at the assembly language, I wasn't looking at the machine code. I wasn't looking at the computer that was running on. I mean, someone might say it's silly, but like I said, that intelligence layer is probably also my safety net, is that actually we can analyze that. So now I'm at the point where I don't look at the code. It's about how quickly I can run my ideas, about how quickly how I can lift, how I can execute, how I can react to the feedback, to the stats of are people using my product? How can I improve my product? How can I see what other products are doing and incorporate that into my tools that I make? So for me, it's just a multiplier.
Yeah.
Do you?
It's a multiplier.
So I'm trying to project that onto you. How do you think maybe AI and technology is a multiplier for maybe not smaller companies, but for next companies? Do you think we'll understand how to embrace that? Do you think there's friction that I am the champion and the knowledge worker in this job, and I am the authority, and AI comes across and says I'm no longer the authority, so there's that resistance to change because now we're abdicating the knowledge to the damn robot. Oh, that's a horrible thought. I'm abdicating that knowledge to the robot, and the robot's smarter than me, and it pretty much is badly. And if it's not, give it 3 months.
Yeah.
And if it's not, give it 6. Yeah. But that's that sad change, that letting go. Ouch. I don't like it. But it is sort of happening. Is that our saviour, or am I going down the wrong path here?
Yeah.
Or is it business as usual, don't fire people? Or was this a question?
Well, I think it's
ask us in 9 months.
I think it's going to be a lot of don't hire people. It's not going to be a matter of don't fire people. It's probably going to be more don't hire people, and that is really quite sad because there's a whole load of
where do our children go?
Human capital. Yeah, that have just graduated.
Yeah,
but
I don't feel so sad for them. Not that I'm saying I don't wish them any bad, but I feel it's like the people that have just graduated still have the biggest ability to change their direction. If you and I, I'm in my late 40s, if I was in a job and I've lost my job, I wouldn't know where to go right now. if I'd relied on potentially a job and I was feeling threatened by AI and I lost that position, I know developers are struggling to find work sometimes.
Yeah.
I mean, I don't know where I'd go. You know, if you're young, you could potentially still stay at home. I'm not saying this is good for young people, but I'm saying they have the most ability.
They're not encumbered with the debt and the liability.
Or maybe they've got a university debt, but enough
same level of leverage.
but enough to potentially change. I'm not saying become a builder or something else, but it's like, man, you don't also want people piling up without work. But you're like, oh man, it's a very tricky situation. The no hiring. Coming back to no hiring.
No hiring.
How can we hire?
Well, you have to hire high agency individuals.
So I'm starting to argue about the generalist now. So the higher agencies.
The generalist is the winner. Right?
Yeah, because now anyone that specialises, well, that's what AI has been really, really well trained to do. For example, like Anthropic now can do COBOL and for IBM. So anyone who's an IBM specialist in COBOL, which runs most of the ATMs in the world and flight booking systems, etc., in IBM, now been taken over by AI. But to run it, you need the generalist.
Yeah.
And I think the generalist now seems to be the new winner. I don't say it's going to be the winner forever. Yeah. The new winner that can wire together potentially different agents, different systems. ADHD would be a superpower right now. Yep. Superpower. The ability to focus on 10 different tasks. I think I'm nearly getting ADHD from actually being a...
Well, actually, so the more you learn about ADHD is the more you learn that actually surroundings play a massive part in actually triggering ADHD tendencies. There's all sorts of things going on.
So I'm becoming a vibe coded ADHD individual. I definitely felt a lot different now that I've started running several projects in parallel. I'm like,
well, I think then it becomes down to, well, how do you, going back to the thinking better piece, is like, how do you then get clarity of mind? You are able to make good decisions. They kind of, the whole dynamic then changes again. And I would just say, look, hey, you have to actually take a breath. You have to really like try and get grounded in some knowledge, but then you have to be open-minded enough to actually say, to be able to do multiple things. There is no job title now. I don't think about job titles. And the great thing is, if you were lucky enough to be building...
You heard it here first. There are no job titles in the future.
No. You might orchestrate 3 areas of the business and the systems that are helping run and deliver that business. And that might be a mixture of computational, human, and capital.
Yeah. And then you realize even orchestration can be abstracted away to software.
Yeah.
Down to computation.
So I don't think we have all the answers. And I think that it's a game of backgammon that doesn't end.
Yes. Yeah.
So I think it's fun. I'm excited. I think that macro is going to be very interesting for the next 10 years. Very interesting.
Yeah.
And that isn't going to be...
when you say macro, how macro?
Macro as in macroeconomics, macro trading.
Yeah.
So I think that macro has been kind of dead for a long time. And now that's alive and kicking. So, what's the price of money? How much should the US have to pay for treasury bonds? Right, for long-dated treasury bonds. What's the right price? What's the right price of a dollar? And, currency has a massive impact on New Zealand, but we don't talk about it. We don't know about it. We don't understand it. We go, oh, well, my property price, well, it's actually up by 5%, so that's pretty good.
Yeah.
Yeah, but you've lost 15% in currency.
Yeah.
So, we think about like, oh, well, this is the price of a property in Auckland. Well, what's the actual price?
Yeah.
Right. What's the real price in, unfortunately, the reserve currency, because that's how you have to price things. But that has a massive impact. We don't talk about it. We have a huge amount of exposure globally now to US equities, to the S&P 500.
Yeah.
Because of indexing.
Yeah.
So because of indexing, everyone's piled into a bunch of assets and said, hey, I'm going to buy every week, irrespective of the price.
Yeah.
That's the danger, right? That's the danger because it's a momentum-driven trade. So I think...
I thought we were trained to DCA into any. I thought that was rare. That was a big.
Well, that is where advice is and society have kind of taken us.
Yeah,
because it feels safe, it feels reliable,
You also think we do under Professor Galloway, Scott Galloway was talking about, we'll do anything to suffer any hard truths.
Yeah.
And by not looking at the price of your property, you buy insurance to prevent any hard fact that may happen. That I've bumped my car and I need to get it fixed. And it's like, I can't deal with that. I've got insurance. So I will abdicate that away as an insurance or a cost. And the same thing with property too. It would be a little bit emotionally destroying to realise, my property's gone down or these assets have gone down.
Yeah,
and I think many things we probably do to avoid emotion, even with we talk about Rocketlab. I'm talking about Rocketlab, but it's sort of like you see these huge dips, and you just emotionally have to do nothing. It's for me to sort of get through it. It's like I have to be impartial to it, to be rational when things are good. Then you enjoy the high side.
Well, and to work out. Well, I think the thing, what you're trying to avoid there is you're trying to work out when. If everyone's on one side of the boat, then that's the problem. That's the issue, is because when everyone's on one side of the boat, that's all you need to actually avoid.
Yeah.
Is like times.
Are we talking about which boat we're on? Are we on the Titanic or we're on a normal boat?
Just any boat.
It's a boat heading towards icebergs and we're on the wrong side.
Because I think that's the thing. I think around, like, if you looked at NVIDIA or you looked at a Rocketlab and you look at these Tesla, you look at polarizing names and you go... and you go, well, I believe in the price being this or that, and you get short sellers that go, well, Tesla's this, and
Tesla's fascinating. I think Tesla's the same as Rocketlab.
They're all cult stocks. So what you're talking about is a cult stock.
Yeah, probably founder-led stocks, aren't they? Which often. I'm trying to think of one.
NVIDIA. Well, let's just look. NVIDIA, Rocketlab, and Tesla. Yeah, all founder-led.
Amazon is not.
Palantir.
Palantir. I don't want to put those people in the same boat as Palantir, but it's
founder. That is founder-led. It is also being priced based on multiples that value investors have anesthesia about, that lots of short sellers will write reports about, right? So it's polarizing. And why does the price become polarizing? Well, it actually is because lots of people are betting.
Yes.
Lots of people are speculating.
And I think founders paint a vision of the future to some degree, or someone in there paints a vision of the future that people are not sure. If we look at Elon Musk, right? He's painting a vision of the future. There's no Model X, there's no Model S. There is going to be Optimus robots in the future. We're going to build 1 billion of them. And you're like, do I believe you? Because some investors do, and everyone else is like, the PE, is that right? Price to earnings is ridiculous. But, if he gets this right around, Optimus robots, autonomous robots, man, what a category. It's the new category. Space was the old category. Starlink was the old category. AI was the old category. You have robots coming around here taking jobs. It's like, man, that's fascinating.
Well, and they generate GDP. And that means if you have population collapse of humans, does it matter? Because you actually have just...
But is GDP without humans, is GDP with high employment the same thing?
Gross domestic product.
I know. And we put that on the pedestal. But can you have you can have an increasing gross domestic product, which would normally link to human capital. Now it's linked to software capital and high unemployment. That's my question. It's like, now we've got people not spending, we've got more individuals with more money.
Well, yeah. Do you?
So I don't.
So what happens?
I feel like we need a
consumption.
We need a new answer for GDP.
Yeah.
I like this thing. It's nearly an organisation we talk about revenue, and we're running for time. Yeah. But revenue per employee. Yeah, as a metric.
Yeah.
How much are we generating per employee now?
Now it's revenue per token.
Yeah.
Right.
And so...
Well, how do you come up with a unit for productivity, right?
When we know that productivity isn't linked to time.
No, it's not.
And
it's linked to output.
And then if we talk about unemployment, this is probably a little bit controversial. I cannot be the first person to think about this. But the government taxes productivity. The government taxes human output. You go to work... You pay a salary, they take a tax. How if you start looking at tokens, it's not as information, but it's actually as productivity. You're starting now, it's like, actually we need to tax tokens. Which is a scary thing. Because tokens are displacing many of this work. It has economic benefit to our country, but it's currently coming through free. It's being actually GST.
It's also massively subsidized.
It is at the moment, and that will change.
So remember,
we're on cheap plans.
We're on max, right?
That's right.
We're destroying the planet doing it.
I'm not sure about this destroying the planet.
Not destroy, but I
understand.
We are using a disproportionate amount of compute and energy to get like huge amounts of output.
So AI is also constrained at the high end of the spectrum. We know that today there's probably must be 0.1% of the population, if that could be even a hundredth, if not a thousandth of a percent using high end usage of AI. And if you probably took that to 2%, we probably don't have the energy, let alone the chips, let alone the silicon, let alone the places to store it, to do it. So I think that would be the only thing you can argue about the ubiquity of AI and increasing GDP is the access to generate the tokens. The energy to generate the tokens, the space to generate the tokens, and potentially the quality of the tokens.
And the utilization of the tokens. So here's the other thing, right? We know that only 20 to 30% of code that is written and deployed is actually utilized.
Oh, interesting.
And we know that 80% of code that is written is not used.
Yeah, interesting.
Right? And I don't think that number's going down. That number's actually going up.
Yeah.
So I think also it's like, for every token you spend, right? For every unit of productivity you deliver, like what is actually useful?
Fascinating. So now we're talking about GDP, and now we're talking about a whole new unit economics of AI, scaling AI. What is the macro of AI in the long term in terms of output, utilization, quality, and consumption, let alone
and unconscious bias? And how does that tie into how we're receiving information?
Yeah.
And then go, wow, that research report is fascinating.
Yeah.
It must be right. It sounds right because it's rationalized it really well.
So then how can you price this into the markets? I don't want to go there. We're getting very abstract. I'm getting very abstract. But it's interesting how the AI game is getting priced into the markets. And maybe through this discussion we'll realise there's limitations in both.
Yep.
Is that you can push and probe AI a little bit at the moment and get amazing results. But at scale it falls over.
Yeah,
because we don't have the ability to output it. And so you'd argue that maybe NVIDIA is priced too low. Is that
might say?
Is that the demand for AI is going to go through the roof, but the output's not going to be there, especially with the speed.
And how much have they leveraged themselves? What are the unintended consequences from the way they've leveraged the deals? Yeah. How do they all come together? Like, there's a lot of unknowns.
Yeah.
And I guess all I can do is say, well, how am I playing it? Right? How am I playing the game? Thinking that because my belief is that I'm building Berkshire Hathaway in an AI native way, right?
Yeah.
Whether or not I'm right or wrong, but my time horizon is 60 years.
Yeah. I'm
not doing this for an exit in 3 or 4 or 5. So I'm like, okay, well, how do I play this game for the next 60 years? And hopefully I can survive long enough in terms of my consciousness and living and breathing.
And that feels like one of the best filters you can ever have. I think it's the same for me for Rocketlab. If Pete's there for another 20 years, I'll just take off what I need every now and again, and it's just going to be the golden goose that keeps on giving. Is my filter for a stock.
Yeah.
You can apply it to any stock.
Yeah. So I
think when you take that 60 years, you go, I love it when you think about the 60-year horizon, good decision making. You can make much better decisions over even a 10-year horizon. 5-year horizon's quite good, but 60-year horizon, you're thinking about your kids now. It's like, okay, kids, you're thinking about how you deploy them in your company.
Yeah.
Oh, geez, that's interesting, isn't it?
Because actually my kids should have kids my son should have kids in the next 10 to 15 years.
Oh, now we're hoping for 6 kids, if you think about that. Not 1 or 2. You're like, actually, with more kids would be... maybe a few more kids,
I can't.
Oh, fair enough. So we'll think of grandchildren. So now you want to increase the chances that they would have more kids.
I would love for them to have kids.
Yeah.
I hope they make that choice.
Yeah.
I can't enforce it.
No, neither.
But, my daughters say some interesting things about kids. And I go, hey, it's a great privilege to have kids.
Yeah.
And it's the best thing ever.
Best thing ever made.
And so how do I play this thing thinking that, tomorrow the whole market could decide that NVIDIA should be a price to sales or price to earnings half of what it is today? Can't control that, right?
No.
But what I can do is I can go, what are some really interesting themes? And by the way, I can change my mind tomorrow. And I think that's a really great thing to be able to try and conceptualize that you can do and be okay with that, right? Is I really like the theme of SMEs in New Zealand being really unproductive with poor succession planning.
Yeah.
So our business is actively trying to work out how do we buy these assets very cost effectively and how do we implement AI native people as business owners into them. How do I build a financial institution that disrupts the management fee and the transaction model?
I like this.
An institution that people could maybe even perhaps trust. And maybe it's not trying to be a neo-bank, but maybe it's trying to be a modern-day guild. And then how...
So not a cult, not a cult.
No. Well, maybe cults are good for
cult, Charlie.
Cults are good for share prices, so maybe a cult.
I would a guild. I think the guild.
Yeah.
The guild
feels good.
We're on a charge. We're on a mission together.
Totally, right? And we are. It takes a village.
Yeah.
And then, lastly, can we build an operating system, a business operating system, that we can use to help our founders and people that we're involved with, and ourselves?
And I think that's awareness. I think there's discussions like today to create the tension, to say, hey, actually, someone's going to take your cheese.
Yeah.
At some point, I don't know when and where, but someone's going to turn around and go, where's my software business, or where's this, where's that, or why are my competitors half the price? Because they've actually bought all the tools in-house, or they're half software.
Yeah.
They've managed to leverage software in a way to be more productive. It's interesting.
Awesome. Well, thank you so much for
Thanks,
the conversation. I've really enjoyed it.
Oh, it's fantastic.